Understanding nonprofit accounting. As a business owner, you are likely familiar with the basic tenets of for-profit accounting. But what about nonprofit accounting? Nonprofit organizations have a different set of rules and regulations to follow when it comes to their finances. Let us understand nonprofit accounting with Peter DeCaprio. What is nonprofit accounting? Nonprofit accounting is the process of tracking, measuring, and reporting the financial activity of a nonprofit organization. Nonprofit accounting is similar to for-profit accounting in many ways, but there are also some key differences. For instance, nonprofits are not required to pay income taxes on the money they earn. This is because they are considered to be charitable organizations. Peter DeCaprio explains that there are different types of nonprofit organizations, each with its own unique financial needs. The most common type of nonprofit organizations, those under 501(c), are exempt from federal income tax and can receive tax-deductible contributions from individuals and businesses. These organizations include religious groups, educational institutions, and charities. Another type of nonprofit organization is a political organization. These organizations are not exempt from federal income tax and cannot receive tax-deductible contributions. Political organizations include political parties, candidate committees, and PACs, political action committees. Income and expenses of a nonprofit organization. There are two main types of income for a nonprofit organization: earned and unearned. Earned income is money from activities such as selling products or services, renting out a property, or charging fees for events or classes. Unearned income is money that is donated to the organization. There are also two main types of expenses for a nonprofit organization: operating and program expenses. Operating expenses are the day-to-day costs of running the organization, such as salaries, rent, utilities, and office supplies. Program expenses are the costs associated with delivering the organization's programs and services, such as materials, equipment, and travel. Highlights differences. Peter DeCaprio states that one of the main differences between for-profit and non-profit accounting is how income is reported. For-profit businesses report their income on an accrual basis, meaning they recognize revenue when it is earned, regardless of when it is received. Nonprofits, on the other hand, use the cash basis of accounting, meaning they only recognize income when it is received. This can create some timing differences between the two types of organizations, but ultimately both methods are considered acceptable under Generally Accepted Accounting Principles, GAAP. Another key difference between for-profit and non-profit accounting has to do with expenses. For-profit businesses are typically allowed to deduct most business expenses from their taxes. Nonprofits, however, are subject to different rules. In general, nonprofits can only deduct expenses directly related to their charitable mission. This means that things like office supplies and salaries may not be deductible. Additionally, nonprofits must be careful not to engage in activities that could be considered self-dealing. This is when a nonprofit uses its resources for the benefit of its insiders rather than for the public good. Nonprofit accounting can be complex, but it is important to understand the basics to make informed decisions about your organization's finances. If you have questions about nonprofit accounting, speak with a qualified accountant or financial advisor. They can help you navigate the complexities of this type of accounting and ensure that you comply with all relevant laws and regulations. Final thoughts. According to Peter DeCaprio, nonprofit accounting can be complex, but with the right knowledge and guidance, you can make informed decisions about your organization's finances. There are some key differences between for-profit and nonprofit accounting, such as how income is reported and the types of expenses that can be deducted. Nonprofits must also be careful not to engage in activities that could be considered self-dealing. Thanks for watching.